Yo, good morning, everybody. Good morning, good morning, good morning, good morning, good morning. So let's see how this fourth day goes. Could we have another profitable day this week? Every single day we have found something profitable. So we'll see how today goes, right? We have news in 6 minutes. So we will see what that does. And then we have news tomorrow as well. But yeah, we'll be in my private group tomorrow. So let's just jump right into it since the news is coming. So we do see that this is still respecting this, I believe it was a 2-day. Yeah, 2-day suspension block. Price is closing above that. We need that to break through that and close below this low if we're going to indeed see it come down here. We are respecting the midpoint, right, from this high to that low. If you take it from this high to that low, we're resting right at equilibrium too, right? If you take it up there, that's why you kind of see the consolidation effect. We got a stop run there. See that there's SMT at that low. SMT here as well. So if we're going to see things recover and go higher in the indices, we need to see this continue to run. I'd prefer to see us get outside of this gap, get above this high to be really certain that underlying things may change and go to the buy side. For the indices and foreign currencies, we do see that the dollar, I mean, this just looks pretty obvious, right? It's kind of got a bear flag scenario though. So you got to have a little bit of skepticism somewhat. But we have consecutive up candles. We have a stutter candle there. So if this closes below that price point, right below that open price, it may support price coming down and targeting some of this as well. When we go to the weekly chart, we do have a bullish order block, that being right there. Okay, so we'll see. Got that gap. So if that gap holds up, say it gets down below this candle, we may look to see a deeper run, but overall it's still gravitated to the buy side. So we need to get a real breakdown, a serious breakdown, and then a serious rise in this, right? So a breakdown in this, a rise in this, if we're going to see the stock market recover in any meaningful capacity. Obviously, the currencies are super obvious. They look like they're really, really excited to get down into this level down here. So if I was trading currencies, I'd be looking there. And of course, still pre-market open, so you got to keep that into consideration as well. This order block is holding pretty solid, right? So we have that retracement, this higher time frame retracement, then gives us a change in state of delivery or a bearish order block. Price comes up into that, respects it, and then now it's pushed lower. That confirms that we're, in a better position to then capture the continuation to whatever target you're looking for. In this case, it's these lows. And then we have, I believe, a gap in there too. Yeah. A gap low, gap high. So we'll see, right? It's treating this as high resistance. Okay, you can kind of see it went down. All of this, we have a stop run. It's kind of consolidated. It's a bullish order block. It's also low, high, failure swing, break above this high. That's a mitigation block. So that's a bullish PD array going against this down movement. So when price traded into it, it's high resistance. And now we got equal lows here. So it may set up a lot lower resistance to get down below as it sets up this downside move. And again, this changes if we see the yields go lower and the bonds go higher. Okay, so if this holds, we do have bullish SMT in here, right? Like I just said. So if we do see that unfold, say it rallies up and gets above this gap, then again, we're going to have no choice but to target the highs up here, this high, this high. We got relatively equal highs up there, so maybe it looks to take that. Obviously, this is later down the line, going against the down movement. So we'll see. Let me see this again. Why is this important, right? Why are we not just jump into the indices? Because this has an influence over what our decision making will be, as far as what we could trust versus what we can't trust when it comes to DXY, foreign currencies, and the indices. Okay. We got the dollar looking like it's still going higher. So in order to justify this rally on the back end, fundamentally, we need to see this go higher too. Obviously, there's somewhat of a crack in correlation. It's not really too excited to go just yet. So that could lead to some issues. Dollar is clearly really accelerating, right? It's really not trying to go lower. Makes sense, right? We got this retracement into the gap. We made a failure swing in here. So this is also a market maker buy model. We got the first stage distribution. Now this should be second stage. We should get up here quickly, especially because we left this failure swing, and we also got equal highs here, this high and that high. So that's a very obvious level if price is going to go up there. Okay. Just keep that a little bit smaller. Take that off. So yeah, we'll see what it does. We'll see what it wants to do in regards to that. It says 75% from the high up here to the low. That's the full range. 25%, 50%, around 50%. It promotes consolidation, as you can see. 75%, which is holding. Generally, that's second stage. And if we get above this high, this up candle, it's going to have to be respected as distribution. So previous sell-off should turn to future bullishness. And again, if it was to break down aggressively, overtaking this fair value gap, that would be my line in the sand. That would turn my attention to seeking this, right? And maybe even this low. Getting down into that would be high resistance because consolidation and a stop run. But again, we'll turn to that when necessary. I don't think right now it's necessary. We're below the open price for the week. So, we'll see what it wants to do to finish off the week. But I think unless something changes, nothing's going to change, right? This is still going higher. These currencies should end up going lower still. And then now that when we get to the indices, if the currencies and the dollar are supporting downside, well, upside dollar, downside indices or currencies, indices should follow suit with that if it's a symmetrical market. If we're cracked in correlation overall, then that may cause a little bit of a discrepancy. But again, we'll see what happens. So far, it looks like price has been wanting to go lower for the indices. I don't think we're necessarily done yet. SpaceX IPO comes out tomorrow. So be ready for that because that's a major market event. The biggest IPO in history. So you can imagine there's going to be a flood of interest into the stock market. The Nasdaq is the indice that told Elon Musk that they will start to accumulate SpaceX. It got denied by the S&P 500, but accepted by the Nasdaq. So I'm not sure if that's going to happen right away. If it happens right away, I think it's going to be pretty dynamic, honestly. SpaceX is going to be a very big deal. It is a big deal. It's multiple things from AI to space to rockets. What else? Compute. Anthropic. You guys know Claude. Claude has some type of deal with SpaceX to borrow some of their compute, right? And they're going to take it many different directions, the SpaceX IPO, but it's a major market event. Okay, so it could act like FOMC, right? It could be very aggressive. Everybody's going to try to buy in at IPO. I'm not. I want to see how it begins. I don't want to be part of the hype, but it is something that you got to keep tabs on. So we are going into this bearish order block here. Again, if things are going to go lower, right, we got this previous day's low. It's been a pretty nasty decline already, but, you know, there's a lot of stuff going on. We're in a highly volatile market. So until price proves that it doesn't want to go lower, we're still going to respect this level here. That's a bearish order block. It's funny that the weekly open is part of that bearish order block. Again, buy side to sell side creates a market maker sell model. We can then see this large wick from the other day, 25% right here, 50%, 75%. So those levels should hold in price, and we should close below that 50% of that wick if order flow is going to continue to be bearish. Same thing with this wick. And again, same thing for this bearish order block on this daily chart. Okay. Clearly it's respecting that. We've taken out previous high here from the previous 8-hour candle. So liquidity has been purged there. So, oh, let me keep that on the chart. Why is it not switching? Okay, so we got this failure swing down here. It's definitely got my attention. We got a stop run up there. Again, we called the short yesterday, worked out flawlessly. Called the short the other day. You could see the power of 3 happening, right? Start of the week, we got accumulation, manipulation against the open, right? Against the downside move. Rallied up to that PD array, and then we got distribution, we got rebalance, and then we got redistribution. So price is just continuing to go lower. We've kind of slowed down a little bit, but again, this failure swing is definitely something overall that I would like to reach for. The current open price is here, so we got accumulation, manipulation above, inside of a bearish order block, inside of that bigger bearish order block on the daily, and we're respecting that lower 25%. So I like that. I want to see if this can't continue. You know, of course, it's still pre-market, so they could bang around in here. Something you could keep tabs on as well. It's going to be this right here. So that gap in there, if it gets down below it, we could use it as reclaimed. We have sell side, buy side, right? If we can get this to distribute down below this, again, I think that PD array would be nice to slide on down into that level down there. This is a small market maker sell model, so it seems. We got the regular trading hours gap from yesterday. Buy side delivery, and like I said, buy side delivery being offered is great, but it's going to be inefficient to the sell side. And you could see that the sell side pushed through. That buy side to sell side, you could see acted as a balanced price range. All of this happened after a stop run. Okay. So hopefully that makes sense. And it's a market maker sell model, right? Consolidation, accumulation, right? One accumulation phase. Smart money reversal below this low, creating a bearish breaker. And then we got distribution, and then it tried to rebalance a little bit, and then created a failure swing here, and then attacked it, right? Low resistance fashion. Okay. So again, I'm curious to see if we can't get this to be a market maker sell model this morning. Trying to target the low resistance liquidity down here. We are dancing around this weekly fair value gap, so we got to keep tabs on that. Let me get the quadrants real quick. So there's 50%, 25%. Okay, so we'll see what happens. We're kind of smashed in between this fair value gap and this bearish order block, along with the bearish breaker here that we talked about, which was respected when price rejected this level. It never broke the high. Okay. We got a rejection block in here, right? Price never really even got up into that, honestly. And then it just respected the midpoint all the way down. I think SpaceX is going to do some really, really intense stuff to the market. There's SMT, if you just saw that right there at the lows. Again, it's going to really be dependent on what the dollar wants to do today. if the dollar wants to just keep raising, like raising the bar and going higher, 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 uh, that'll put this in position to, further decline. I don't like equal highs that are left available. I really can't stand that. So, that is a risk up there, especially ahead of the IPO. It's a big market event. Like, I don't think people understand how important this is with SpaceX. It's not only space technology, it's satellite communication, it's rockets, it's military contracts, it's AI, okay? It's compute. I mean, this is a powerhouse at a $1.7 trillion opening valuation. Like, what company begins their journey into the stock market at $1 trillion valuation? It's very, very high in comparison to their income, which is why I'm not going to engage right away when it comes to long-term investing. But it's going to have an impact. And if people are asleep on that and just ignoring it, what are you doing? Right? Like, there's huge, crazy things happening. And then you got Claude Anthropic that's coming out. They got a huge valuation. They're coming in. And then you got OpenAI, which is coming out. It's going to have another huge valuation. They're all trying to get into the stock market, right? And they're all damn near $1 trillion companies. Okay, so you can imagine it's going to have an impact. So we're going to be very cautious when we're live tomorrow, you guys in the private group. We're not going to be too aggressive. I'm very curious to see, because we've never had this type of IPO take place. At least I haven't. There has never been an IPO or a group of IPOs that are coming out damn near at a very, very similar time with insane $1 trillion valuations. That's never happened. So this is all new to everybody. So treat it like, going into NFP. Also, on the 15th or over the weekend, I think next week, actually. Yeah, on Tuesday or Wednesday, we're going to have to roll over our charts. Okay. We have a new quarter coming out. So we're going to be in the third quarter. And then the fourth quarter comes, I believe, in September, October. And then, of course, the year starts over in December, right? December 15th, 16th. So all of this stuff is happening at once, okay? So the markets are extremely volatile, and I think that's what is causing all this craziness. This huge drop, I don't think it's going to be, super long term. I mean, there's too much positive stuff happening, too much money being tossed around. Okay, so yeah. Good morning, Avinity. Tony said, do you think it's better to wait? Yeah, I'm gonna wait. I'm gonna trade options on SpaceX eventually, but within the next 2-3 months, I'll talk about it. Right? If you guys want me to talk more about long-term investing, I could talk about that too. I've been managing my personal portfolio for literally almost 8 years now. And we've beat the stock market every year. Just another thing that I've shown publicly. We're not just normal traders, right? We are all around investors. And, trading's part of it, right? But if you guys want me to talk about that a little bit more, I talk about it really, really deep in my private group. But I could give you guys some stuff here on YouTube as well. Give you guys some tips. Just let me know. The recent high landed in the golden pocket. What is this golden pocket you're referring to, Sean? I'm not sure what that means. If you could elaborate real quick. Yo, what's up, Byron? Optimal entry. You mean optimal trade entry? So from like that high to that low? What time frame are you referring to also? Oh, you're talking about this drop right here? Yeah. I mean, if the narrative was showing us bullishness, we would be able to assume that that may be the case. They may be dropping down to a discount to go higher. I mean, it could happen, right? But because of how aggressive this is, one of our golden rules is we never pick tops and we never pick bottoms. Because of where price is at currently on this daily chart, I would still classify this as part of picking a low, and we're not going to do that, right? We got this bearish order block. Until that bearish order block is violated, we're going to have to stick to seeing how much further this is going to go lower. One thing that does kind of go in support of that idea of this going lower right here to then maybe bounce, targeting these equal highs, is the fact that we're inside this weekly fair value gap. So it's been bearish, right? It's Thursday. We've basically hit a higher time frame PD array. So with that being the case, with us going lower for the beginning of the week, and then we hit a reasonable level that could give us a response like this, like a weekly fair value gap, an order block, sweeping a weekly or daily or monthly low, you know, those types of things going into a Thursday after the market's been aggressive can many times promote what ICT calls a TGIF, right? Not saying that that's going to potentially happen here. It could. I will only be considering that if this fair value gap gets violated. Otherwise, this is just a simple retracement, right? Optimal trade entry going to the sell side. Okay. It's literally right at the OTE right there. Where the hell is it at? Okay. Oh, wait, whoops. Flipped it upside down. Whoops. Yeah, so 62% is right here. Right? So we did liquidate this. This is a very fast pre-market / London session. So I don't like that necessarily when we go into New York. We did have news, obviously, at 5:30. But I'm still going to wait. I'm still going to wait till closer to 6:30. Let me see. Where do I find those news? I've been looking for a reliable website, but I mean, these IPOs of companies, not the economic news on Forex. Well, there's a thing called Trading Terminal. I like to use that. But I also have some content creators that I follow. I talk about them from time to time. People that I respect in the long-term investing space. One of those being this guy named Tall Guy Tycoon. He's one of my mentors. I've been investing in him as a mentor for 3 years, just to learn, you know, long-term investing. And then I have another person that I've invested in to learn about the long-term side of things and breaking down companies and, you know, all that very deep analytical stuff. The other guy's name is the Wall Street Trapper. He's not everyone's cup of tea, but he's, you know, normal guy. And the way he communicates the data, how to analyze the data, which can end up being very, very complicated. I mean, it's just awesome. And then I also, between those two, have been able to develop my own formula to break down companies, which I have provided in the private group. If you're in my private group and you guys haven't looked at that, I've been talking about it a lot recently, just because there's so much stuff going on. I gave you literally a prompt that you could throw into ChatGPT, and then it does all the data or the breakdowns for you for a company, and it spits out a grade. And that system I've used to beat the stock market literally year after year. Like this year, I'm up 43%. I was up 59% at one point when things were just going crazy. Last year, I was like 38% or something like that. I showed the year before that, I think it was 26 or 27%. And I wasn't really tracking it too aggressively years before that. I could find the data, but just simply the last 3 years, we have absolutely destroyed stock market returns by manually trading, managing our own portfolios. But again, that's a whole like deep lesson in itself. There's a lot that goes into it. But those resources I mentioned are definitely worthwhile. But again, I'm sure that everybody sees this drop and wants to get into a trade, but that's why we're waiting, right? We're going to just analyze, get our footing with what we think price is going to do. Are we going to respect this bearish order block, or are we not going to respect that bearish order block? Are we going to get up into this level and consolidate because we're one day before the IPO comes out, right? Are we just going to stay consolidated because we are literally like a couple days before the quarterly rollover? Again, we're going to have to change our symbol as well, right? We're going to have to get the... Oh, wow, I don't even have it. Oh, I do. We're going to have to get the other symbol. Where's the September? So it's going to be NQ... What is that, U? NQZ. No, wait. Yeah, NQU. YMU. Where the hell where'd the U go? Oh, there it is. So these are going to be the ones that we have to switch to later on next week. Okay, but yeah, so Trading Terminal, Tall Guy Tycoon, Wall Street Trapper. Those are the only things that I use, and ChatGPT or Claude or whatever AI you like. I've done all my work, all my study and formulating of my system that I use to break down companies in ChatGPT, so I just stuck to that. But yeah, it works, right? And then you just couple that with what you do with ICT concepts, and you can find when a good time is to buy, right? Or if you should get out of the long-term investment. I audit my portfolio every quarter too, so I did that yesterday, and pretty much all the positions I'm in right now, those are going to remain intact. Companies that I have in my long-term portfolio look like this. Right, these are all the companies that I've dug into very aggressively. I'm about to shift this one to more of an AI-driven energy company, which this is the one that I got my attention on here. CEG. It's a very, very interesting company for energy, for AI. Another one that I want, well, I don't even have it on here because it's way too expensive. It's like $800. It's like GEV or something like that. It's all the infrastructure that's building energy for AI data centers and just AI in general. CEG, they got like nuclear reactor exposure. There's another good company called Oklo. But again, we could get into a full lesson about stocks, analyzing stocks and whatnot if you guys want. Not many people ask me for it, obviously, but hey, if you're an investor or a trader, you should look to be an investor, right? Long-term, short-term, expand your horizons later on, but of course, focus on one thing at first. But when you get the skill set, when you can understand where price is going like we do, you're able to then expand a little bit, be more aggressive. Like my interest is cash flow and growth. So I have a 60% cash flow dividend paying objective for just passive income. And then I have 40% of the portfolio that is straight up growth for AI and tech, right? And energy and any of the bottlenecks that are part of AI, like data, right? They need memory, right? So data, compute, energy. That's going to be the sectors, in my opinion, that creates the newest millionaires in this next generation. Because whether we like it or not, AI is taking over the whole world. So it's kind of something that we just got to deal with and adapt to. And pretty much every company that you see on that list I just showed you, they're part of that, right? VOO is a good one. You could look at VOO as a bank account. It's not very volatile. It's basically following the S&P at a cheaper price. right? So you don't have to spend $7,000 for exposure to the whole stock market. But VOO, right? It's good. ETFs are good. They're baskets if you don't want to do individual investing because maybe you don't have the time and whatnot. I have plans for that as well for those that come to me asking for what they should look into. I'm not a financial advisor, right? I'm not going to tell you where to invest, but I tell you where I'm investing and why and how, right? And you can make your decisions on that, of course. But VOO, it's basically the stock market, right? The whole S&P. So it's a good, I look at it as a bank account, right? Because, unless the whole stock market fails, that thing is going to keep value. And if it keeps going higher, right, VOO has performed pretty well. It's less volatile. I'm a little bit more risky, but at the same time, still more focused on income versus growth. But I'll be damned if I let the growth get aside from me or get away from me in this environment. I mean, we have SpaceX IPO, Anthropic IPO, OpenAI IPO. Stock market hit multiple all-time highs. I mean, if you're not invested right now, like, what are people doing, right? Again, you want to be a well-rounded investor, right? And learning ICT concepts is at the core of you being able to do that because you have a strategy. You could be any style of trader you want with these concepts. So let that be an encouragement, something that you could be excited about, that once you master where price is going to go and the system that ICT gives us, all the components, right? And when you build your own system, just know that once you do that, you can branch out and do many things from options. Obviously, those have their own little special rules and whatnot, which I'm just this year getting into. I'm not going to be sending out live options trades or anything like that for a while. But I already break down companies. I already manage my portfolio. I already adjust every quarter if needed, depending on what companies are not fulfilling what I want them to do. Just like a, normal fund manager, I do the same stuff, just with my own system that I've learned. And it's pretty good. So again, everything outside of this chart, everything outside of futures, it comes along for the ride once you understand these concepts. So again, let that be an encouragement as far as why you should want to learn how to do this and why you shouldn't quit, why you should keep pushing, make the changes that are necessary, because it's much bigger than just a futures chart, right? It's much bigger than you just being a day trader. Okay. Because you could build wealth not only as a futures trader, of course, but you can have multiple baskets working for you where your money is just like a juggernaut working for you, like soldiers being sent to the battlefield to bring back more money. At least that's how I view it. Right. But yeah. So keep that stuff in mind, you guys. For those of you that are interested in trying to be a well-rounded investor, not just a day trader, you can be just a day trader, but why limit yourself when you know for a fact what I just said is true, right? If you learn how to trade using these concepts, or, it's not the only way to make money. This is my preferred way, obviously. But once you learn it, you can do other things. It's not just about one style, right? You can have other things working. Like my goal is to have options trades working just like my long-term portfolio is on the back end while I gain cash flow through my day trading. Okay. That's just how I've structured things for the last 4 years. And, it takes time to get there and you want to know what you're doing so you can hold on to those long-term holds. But we are in a revolutionary time with AI, societal changes, space technology. I mean, look what they're talking about nowadays. Freaking talking about aliens. Like aliens are real. Like this is crazy times we live in. They're trying to put data centers, SpaceX is behind this. They're trying to put data centers in space because if they're on the Earth, water is going to become scarce. That's another play you could consider. Water infrastructure, right? Because AI, what people don't realize, AI sucks up millions of gallons of water. So if they don't get a hold of this, I mean, there's going to be scarcity with water. That's traumatic, pretty bad for society. But then again, as an investor, you could take advantage of that, right? If it becomes scarce to get water and you're invested in the infrastructure or companies that purify water or companies that have rights to certain water, like bodies of water, I mean, you could imagine supply and demand, right? Isn't the water reusable? I think in some cases, but again, it's cooling something. So it's evaporating, right? And they don't have enough water at this moment. At least, that's the bottleneck that they're talking about. The NVIDIA CEO was talking about this, I think 3 months ago. And then the guy that I mentioned, the tall guy tycoon guy, started talking about it. And then the Wall Street Trapper guy started talking about it. And they're really, really good with this stuff. And they gave some resources to look into. And this is a very quiet giant, right? It's a very, very quiet risk that they're not publicizing because there would be a lot of pushback about AI advancements. Because the grid's, that's another thing, the grid's not ready for all the data centers, right? For all the electricity that's needed. So it's going to be nuclear that comes. There's going to be all kinds of different stuff. Let me see, I recycle water for oil field. So maybe they should send some of our water. Yeah, I agree. They have to figure something out. And of course, this is like a future potential risk, right? But hopefully human beings can be human beings and find solutions, right? I really do hope that I hope the energy sector works with each other. I hope the oil industry doesn't get upset at different, like nuclear and all that. I know there's a fight on Capitol Hill against nuclear and some of these other forms of energy because oil companies don't want to lose money. But I think there's a way that they could all work together, and I hope that that's what happens for the sake of society, right? But I didn't know that they recycle water for the oil fields. I didn't know that. Yeah, I didn't know that. I really hope that water doesn't become a play, because that means that society is going to go through some real situations. You know what I mean? I mean, they're even talking about putting data centers in the ocean, but the salt water, it's not good, right? Salt water has its own complications. And it would be a tragedy if they start sucking water from the ocean to do this. I mean, these people, there's not a lot of regulations because Trump wants it to, he wants to give them the freedom because our enemies have the freedom to advance. So we can't slow down at this point. We're in a position where we have to just full throttle, and the unintended consequences we got to pay attention to, not only for our lives, right? But also for opportunity, right? Yeah, when they frack the oil, hot water comes up as well, so they send it separate. Oil is left, then it adds chemicals to it, and then send it back to them to reuse. Oh, that is so fascinating. That is fascinating. I'm sure that they're thinking about all these things. I hope so, because this could be a real issue. But even if it doesn't become like a serious problem, there's going to have to be innovation around the water sector. I think I shared some different assets that are related to this. It's just something to keep your eyes on. But that's fascinating, Sean. I never knew that. I mean, it makes sense. It makes sense when they drill. There's water that potentially comes out. But yeah, that's interesting. I never even never knew that was a thing. You learn something every day, right? But yeah, so getting back to the chart, do you guys have any questions specifically before we hit the open? Again, you notice that I'm not concerned. We're never concerned if we see a move that happens. you know, the time has to align. And missing a move is not a concern. But yeah, let me know if you guys have any questions before I really deeply start getting into this. Again, this is looking like an optimal trade entry. I would have preferred to see the lower half stay respected, which, you know, I guess it is. I guess it is pretty solidly respecting, well, exactly respecting the midpoint. So that's kind of interesting. If we take these highs, it does run the risk of us looking to take some of this out, because then this could be a market maker buy model, right? We got accumulation. We were respecting that accumulation. Price rallied up, respected this high, low, higher high as a BPR. Off the heels of that, respect of this. And then we got this whole range in here. If we shrink it down a little bit, see if we can get a more precise view. Say that right there is significant. So we got the high, low, high that breaks, right? So we did tag the midpoint, but we haven't spent a lot of time above it. So that's fine. But we want to see this break down. I'd preferably like to see this low get violated, allow for this to be given up, right? Came to a premium, right? This may set up a continued decline. Obviously, the time is not in alignment, so, you know, we're not going to be able to engage this. I'm not, especially a day before the IPO. I mean, we got landmines ready to explode all around us. So it's a very risky time to be involved. Nothing to be scared of, but it is something to acknowledge that you have to manage risk and not trade more than 1 to 2 trades. Never go over that, and never over leverage ever. Unless you want to fail, then you could do those. But, you know, that's the commonality behind traders that do not succeed. Most of the time, like 95, 99% of the time, over trading and over leveraging occurs. When in reality, if they just remove that, it'd be a totally different scenario going on, especially if somebody knows where price is going to go on a daily basis. And you're correct, right? Or at least on a weekly basis, at least you know where price is going to go, right? All you got to do is have that, a model that works for execution and then risk management, and that's a recipe for good results, right? And then as you gain experience, as you get better at applying these rules and this understanding, I mean, the natural progression of things is you'll get better, you know? And of course, there's lots of nuances. There's lots of different components to the market. It is a very complex animal, but your execution decision-making doesn't have to be complicated, right? All you need is one PD array to go off of. It could be a fair value gap. It could be a breaker. It could be the mitigation block or the rejection block, which I've been pushing on to all of you guys a little bit more aggressively recently. But it doesn't matter what you use. It could be optimal trade entry. It could be breakers. It could be the wick midpoints. You guys know in my private group, I've created a model surrounding wicks for continuation. It could be my razor model that I teach in the private group. It could be institutional order flow entry drill. It could be the Reaper. It could be, I mean, there's so many PD arrays. You don't need all of them to be profitable. Just like you don't need every ICT concept to be profitable. You just have to be able to make decisions. Is it going higher or lower, right? Is it attacking liquidity in the form of a high or equal highs? Or is it attacking lows? Or is it attacking some gap in price, right? An inefficiency, right? Or is it consolidating? Holy crap. Sorry about that. But those are the only things that price does, right? So when we're in price, what is price doing? Well, we've attacked the lows. It's now returning to internal range liquidity, or a gap, right? We don't see a gap. So what is internally available? The order block, right? The wick midpoint, okay? And then once we can fulfill that and start pushing away like it is here, right? If we can continue, we have one change in state of delivery here. We'll have a second change in state of delivery here. So that'll then put us in position to, again, seek the lows, right? And go from internal range liquidity, that being the retracement, then to external range liquidity, which is going to be the lows, just like this, right? It ran lower, failed to take out that low. So external wasn't taken yet. Ran up into internal range liquidity, being a gap, this volume imbalance, the new week opening gap, right? It's volume imbalance on a daily chart. And then what happened? It showed respect to that, and then we looked to go short. Targeting what? External range liquidity in the downtrend. External range liquidity is lows when it comes to a downtrend. External range liquidity is highs when it comes to an uptrend. Okay, simple as that, right? And then whenever, say, the high is taken in an uptrend, right? Internal to external range liquidity is delivered. You look for that high to that low that just got taken out as a balanced price range. And then when price comes down into it, you do not want to see the midpoint get violated. And as you can see, when it does get violated, we end up going the other way. And then it shifts from highs being external to lows now being external until things change, right? Like this getting above this order block, right? Or taking out this high. Then external range liquidity will turn right back to being the highs. All right. And that's just the ebb and flow that takes place constantly, nonstop. So you're either going to be a trader that seeks external range liquidity or internal range liquidity. You want to decide what style you want, right? When I say violated, I just mean it closes overtaking the whole range. It could wick through it, right? Wicks do the damage. Wicks are manipulation, essentially. The bodies tell the story, the real story of what price is really doing. Like if it trades into this order block and it wicked all the way through it, but the body closed below the 50%, that tells you that that order block is still valid, or any other PD array that happens to. It tells you that it's still valid relative to the closure relationship that it has to that PD array, right? Current price and that PD array. This is fractal too, so the same thing happens on the 1 minute chart, right? If it trades into a level like this bullish order block, these consecutive down candles, that's one bullish order block. Let's go to the 30 minute, 1 hour. Okay. I guess it doesn't show it. 30 minutes close enough. So these consecutive down candles, when it trades back down into it, once it violates it, goes above it. When it trades into it, it should not close below that midpoint. Otherwise, if it does, it's going to take the low out. And you got to use something else, right? You got to go the other way. It's the same thing with the gap, right? When we trade into fair value gaps, the wicks can overtake the whole thing. Preferably it doesn't. And there's moments in price that we've described over the years, just over this year and last year, how to determine whether the fair value gap is going to be filled or not, and what the data is telling you when it does or doesn't fill it to a certain extent. But once it closes outside of it or closes above that midpoint and we push away, especially if we get an order block that forms that gets violated in that same moment, we know that price is going to keep going until it violates it, right? And comes back down and breaks through it like it may start to do here. Okay. We have a validation invalidation process as well overall, which Sean, you will definitely learn in the coming days, weeks. There's a lot to discuss before we get to that point, though. But yeah, we'll make sure that's part of things because it's very, very significant. Because the validation invalidation process doesn't only get used on the lower time frame for an entry, right? And to determine whether that's going to work out or not. It's also used to determine whether our bias is trustworthy on that daily chart. Because bias and narrative, right, like we've talked about, are two different things, but both of them are derived from that higher time frame. So the monthly, weekly, daily, quarterly chart, right? Like 3-month perspective. You guys have seen the power of this 3-month chart in January of last year and this year, when we were able to basically pick the lows of the year and anticipate, like in this instance, the rejection. You see how it respected that wick right there, right? Price closed below, or just simply tagged the midpoint and then immediately started to displace lower. And so that put us in position to know that this was external range liquidity being taken. This wick is going to be respected and then seek internal range liquidity, being a gap. So again, it attacks highs or lows for external range liquidity, depending on the narrative. And then once you can determine that that took place, your next idea is, okay, where could price retrace down into internal range liquidity before the next run takes place? Because it goes from external to internal, internal to external, constantly, right? Over and over and over on every time frame. And if you can decide what is going on in terms of that from the higher time frame, you can hold on to that for a couple of days, sometimes weeks. You guys, in this case, have seen months because we live on these higher time frames and use like the quarterly perspective, 6-month perspective, the yearly perspective, year to year, right? And that just helps further justify the narrative. And again, our validation processes can be used on all these time frames. And so if it doesn't invalidate a narrative that's, say, bearish, then if a run higher happens, unless it violates our rules, right, and our levels, we're going to continue to hold through something like this. You guys have seen multiple times over the years, price can run against us aggressively, right? It could have a huge run higher if price is overall going lower, and we still look for shorts. And if we look for buys, we know that it's short term and it's retracing, right? It's going into something in particular, so then it can tip over and go the other way, right? That's narrative. When it tips over and goes the other way, you're able to then determine day-to-day bias, right? Is it going higher or lower, right? Narrative is the why. Why should it do that, right? Bias is just what direction it's going to go into. Okay, so the narrative, a bias without a narrative, like understanding why that bias should take place, without the narrative, bias doesn't work, you know, because it's just randomly guessing if it's going to go higher or lower based on bullish or bearish candles. And it's much deeper than that, right? To be able to do what you guys see here, right? And again, part of that process obviously is taught in great lengths on Sundays here on YouTube. But yeah, and then of course, you know, we talk about it every day in my private group. But yeah, so one of the easier ways to validate, say, this run lower, you take where price is at currently and you count up, right? You look at whatever PD arrays are in price. This is why it's significant to taste many PD arrays that ICT teaches, because they're, most of the time, many of them are in, well, I would say every time a price leg happens, there's multiple PD arrays in that price leg. Okay, and you want to go from where price is at and count 3 PD arrays up. And if that third PD array level is violated, many times the fourth thing that's going to be violated is you if you don't adjust, right? And that's how ICT has described it when it comes to the 3 PDA rule. Like in this case, you'd see the wick midpoint, that's 1 PD array. We got the order block, that's 2. You got the volume imbalance, that's 3. You got the high up here, that's 4. And the wick, that's 5. Okay, so if price was to get up into that level and this rejection block, so 6 PD arrays in this small piece of price delivery. So if this was to get up beyond this order block, like we mentioned, right? We made it more simple by just mentioning the order block, but there's more stuff inside of that. But if it was to get up there, you know that multiple PD arrays are being violated. So if they're not being respected to the downside, why are we going to force sells? We would have to adjust and then consider potential buy-side delivery. And it's the same thing with the downside, right? When price was up here, if we count 3 PD arrays down here, we have a wick, midpoint, we have the low, we have a fair value gap, we have a volume imbalance, new week opening gap, We have this down movement, up movement, right? That's a bullish order block here. Right? If we move up in time frames, right, you can see, right? It's that down candle. We got a wick right there. So once it violated that, right, and got down below this level, you know, it's very likely the price is going to go lower. And for those of you that know SMT, we had SMT up there, which is just simply a cracking correlation between correlated assets. Like one or two of them are creating new highs, while one of them is creating a lower high, or two of them are creating a lower high while one is creating a higher high. That's a cracking correlation. Doesn't matter if multiple have it. It matters that one between all three of the indices has a cracking correlation. And if it's at a logical level where we can expect a retracement or a turn against this, in this case, buy side movement, then many times that'll lead to some type of retracement, or like in this case, a full-on reversal looking to seek the opposing side of liquidity. Okay. Again, each of these different components can be taught at great lengths. I mean, I've done lectures on these that are hours long. But in a nutshell, hopefully the conceptual theory makes sense. And again, anything you guys need extra help with, just let me know in the DMs and we can make some time for it. But yeah. So again, that's why this high or this order block being violated would change my perspective. And this is why I am still not fully convinced that we're going to go through to the buy side. And, you know, there's always the chance for me to be wrong. We're ahead of the IPO, so there's many things that can turn this into just a liquidation to then go higher, right? Get people in at a lower price, just so they can continue to make all-time highs. That very well could happen. But again, we don't pick lows and we don't pick tops, right? Even when we're correct. And many times, you guys see that we capture those turning points. But, you know, it builds the trust when we allow more data to come out. Okay. So yeah, so it's better to give up that, you know, picking a top or picking a bottom, so you could then catch the lion's portion of the, you know, the meaty part of the move, right? And then just catch continuation supported by something like this, right? So again, just like there was SMT at the highs up here, we have SMT at the lows. So with that being the case, again, we can't necessarily disregard the likelihood of this potentially going higher still. It's going to have to show that it wants to do that by, first and foremost, continuing to respect this up candle here. Okay, because that is the previous bearish order block in this down movement that then went higher. So that bearish order block, drag that over. Look at how it's respecting. What happens on the left side, right? If it's a bearish order block, if it gets traded through and you have a reason to want to see price go higher, you know, we should be able to see it do the opposing thing and create a bullish order block. See that? Same thing if this was a fair value gap or just like a gap in price. If it's a big gap in price, when it gets overtaken on the right side, when it comes down into it, it should invert. And instead of being a bearish PD array, it should then turn to a bullish PD array, right? Because we all know, if you spend time with ICT concepts for a while, every single PD array that I mentioned earlier and every PD array that you're going to learn as an ICT trader has an inverse nature to it. So if it fails to give you an opportunity to, say, go lower, right? When it overtakes, say, let's use this for an example, low, high, lower low, that's a bearish breaker, okay? Well, if that breaker candle, right, that last down candle gets violated to the upside, you can anticipate that it may turn into inversion and go the other way if the higher time frame narrative supports it and you have a reason to go higher, right? Of course, context is always significant, which is what we teach here and in my private group, like ad nauseum every day. But theoretically, you want to consider that. So if you have one model, say you use order blocks, well, that one model by default has two opportunities, right? You can use the actual one or the inverse nature. So every single thing that you use has an inverse nature to it. So every model, essentially, aside from a handful of them. Well, yeah, there's a couple that don't really have it. But for the most part, anything you learn is going to have two opportunities because of the inverse nature to these concepts. Okay. And that's true with every asset. Doesn't change when you go to a different asset. It's all the same. Okay. Yo, what's up, Maddie? Happy to see you here, brother. I saw your message today in the one-on-one schedule. I was saying 6 p.m. You were correct in that assumption. I'll see if I can get it to be a little sooner. I'm with my daughter at that time. So we'll see how that goes. Maybe I could just steal an hour from that day and then try to add it on for the next day, so we could get started a little bit earlier with our one-on-one. We'll make it happen though, bro. We'll make it happen though. Let me see. Did I miss any questions? Okay. But yeah, so if you guys have questions, let me know. Of course, that's the whole vibe here. Yeah, no worries, Maddie. You don't gotta apologize, brother. I know life gets busy. You have a lot going on. We'll always be here. That's something you can that I can guarantee. You know, I'll always be here, unless God calls me home. Let me see. No, I mean I'll see if it's reasonable. I'll see. I think it will be. I think we'll be able to make it happen. We always find a way, right? So yeah, if you guys have any questions throughout the call, let me know. But now let's start getting into this nitty gritty in here. So if we go to the 15-minute chart, like I said earlier, we have the power 3, right, taking place. So accumulation, manipulation already. We did set these equal highs and already started to deliver this down candle. I do believe that this liquidity pull down here could end up presenting us with low resistance. So we'll just have to wait and see how far it wants to be able to get down, if it wants to get down. Again, all the things happening tomorrow with the IPO, treat it like it's NFP. Okay. Let me see. May said, just remember, I have at 6 p.m. call that lasts 1 hour or so. After could be better. Oh, after 6 p.m. Oh, okay. I mean, I think we can. I think if earlier, if I can't negotiate with my child's mom, which would be kind of ridiculous if she doesn't let me do that simple request. But if that can't work, then we could definitely probably hop on after. Yeah, we could see if that could work. Yeah, if we do, before we may have an hour or so. Oh yeah, no worries. No worries at all. We'll make it happen, Maddie. Don't worry. And maybe I can make adjustments to some stuff later in the week too. Just like pretty much every day I have a live call with somebody, because I have 18 one-on-one students I work with every week. Some hop on, some don't, some cancel, some don't. Some are on every week, some are on bi-weekly. Just kind of varies. Yeah, we'll see. We'll make it happen though. So again, we have this bearish order block. We do have this fair value gap in here. You notice how this did not come up into the upper portion of that whole fair value gap. It kind of just stayed in that lower portion. We have sell side offered, buy side offered, and then displacement that takes that low. So we have buy side and sell side offered up to that point. So in reality, the only real inefficiency relative to this fair value gap was here. And look at that precision right there. Look how beautifully the algorithm seeks these particular signatures in price, these specific areas in price. Pretty much 99% of people are going to highlight the whole thing, and there's nothing inherently wrong with that. But you want to be precise. You got to remember that it's only seeking the inefficient piece of that fair value gap. And you could see that here. Why would it close so precise if this was random? Right? Because this low to that high, right? A little gap in there was available with no candle trading through. So it only had sell side delivery. So what did they do? Quickly offered buy side in there, closed right there, and then now we've quickly started pushing away. Right? So again, I wouldn't really want to see this go any further. This high hopefully could stay intact. If we're bearish, it should. I wouldn't put it past them given that it's coming into 630. It's the open. They may look to wick up there, but preferably they don't. And then we just melt. And if we get below this low, this wick is a balanced price range if we can get displacement through it. So whenever it turns into that, we don't want to see 50% of that get violated. All right, we want to stay in that lower 25%. So yeah, it's showing that yet again we're correct with what it's doing. Because it's at the 630, we got to wait. So I'll let this go if we break down. And then if we can be down here at some point, I would really like that, because then again, this will be our market maker sell model. We do have a regular trading hours gap here now that just populated, as you see. So, we got to offer buy side and sell side in that area to balance it out. The question is, when is it going to do that? First and foremost, though, I want to see if we can get this off the heels of this analysis to get us to the midpoint right there. It's basically just targeting that low, like I said. Is that 1 hour? Let me take some of that off. Okay, so yeah, we're going to pay close attention to this 1 hour, because look at that wick. We got retracement, right? It's buy side, sell side. So again, 50% should not be violated. We're getting that order block to hold, so I really like that. You see the body closures going into this order block. That's telling us that, it's very interested in going lower, at least for the moment. And we'll see if that wants to continue, right? You could be aggressive and try to take this down into that. I'm not going to be, right? I'm going to be willing to let it go. But nothing in here has upset the likelihood of this going lower still for the market maker sell model. We do have our first accumulation in here, or second accumulation in there. What in the hell is going on? Yo, can y'all see everything okay? I got a big ass error message. I don't know what the hell's going on. They know we're freaking too good, yo. They're trying to silence the stream. What's up with that? What's up with that, yo? Yeah, let me know in the chat if you guys can see things okay, because I'm not even sure at this point. Oh, okay. What the hell is this? Got this giant error message. That thing freaked me out right now. Oh, whoops. So yeah, I'm really intentionally trying to see if we can't get down to here. It's the first objective. So retracement, we should see this continue to collapse. All right, small market maker sell model, low, high. Hopefully get that lower low. This down candle here was treated as a bullish order block. we should see that continue to hold in price and go lower. We're assuming that it's going to continue to run down into that level. Again, all you're looking for is 20 to 30 points. That's it. Not looking for much, right? Just bite-size pieces. Let's see if we can't get that thing to continue. What are the other assets doing? Yeah, everything's dropping. Holy crap. So yeah, we'll see what happens closer to the macro. I'm willing to let this go. Oops, I thought we had that lower time frame on. So yeah, we'll see if we can't get it to get down, gravitating down into this. If not, it's going to try to wipe this out and then potentially wipe this out if it gets up beyond this high. So yeah, we're going to keep tabs on this. Yeah, you see why we wait? See why we don't chase things? Okay, so now we got to watch and see how this is going to be treated in here. If it gets above this level in here, it'll create a bullish breaker. And again, it might want to seek these equal highs. That's why I don't like really considering any shorts against highs that haven't been taken. The risk of it getting up there and then just continuing to go lower. I mean, it's definitely a really real risk. So yeah, let's see what this does in here. Yeah, getting up above this, that creates a bullish breaker. This candle is going to have to be violated if I'm going to look to take a short. All right. Otherwise, if we get displacement through this high, I would not be surprised if we get up here. It's too clean. They don't like that type of stuff. They like to make smooth edges become jagged. It's the slogan ICT says. Yeah, this came right down in, tag that. All right, we'll see. Right, remember, watch this candle in here. We got our first presented fair value gap right there as well. So yeah, watch that first presented fair value gap right there. We don't want to see it get back above that if it's going to go lower. S&P has taken that low already. I don't necessarily like that when it does that. Do got SMT at the lows there too. It's definitely a red flag for the shorts. Again, we're waiting till the macro comes out. So yeah, it looks like it's holding. I said right when that gets tagged, right, a short will probably be offered, and it looks like it was correct. Easy 20 to 30 points offered right there. 68 points in a matter of seconds. See if it can't give us a follow through. I don't know how I feel about follow through so much today. I think we're going to have trouble getting that follow through throughout the morning because the IPO, it's a very big deal. They're going to wait. They want to crush people, build that liquidity. But yeah, let's see how it treats that midpoint. See if we can't get to that. Literally one candle can get us down into that. We'll see if they want to do that. But so far, that little initial short could have been taken. It's a little bit closer to the macro. Right from that area in there, once it broke through it. Why the hell is that thing so extended? Stop in this case would go above that level up there. It would have offered you something small. It's more than enough. Easy bread and butter right there. See, it's very reluctant to get down through that. Let's see if it can open up a little bit, break through that low. I don't like that it, again, has all these equal highs up here. It's very much a risk. I hate looking to go short when there's stuff available like this because it's just a risk. You know, they could run it up there, tag that, and it wouldn't upset their ability to go lower. So yeah, we're watching this order block here. It's very, very reluctant to get down there. So clearly it's presenting high resistance. We've already taken stops down here. We got SMT. It's not something you like. So let's see what it wants to do with this. So that would have been very, very short-lived, very, very small. Again, this makes me more and more interested in seeing them try to at least get up here, swipe some of that. Otherwise, every sell setup is going to have that risk. And clearly, we're in high resistance territory. But nonetheless, almost 2-to-1 trade setup offered in there after the overtaking of that first presented. Because we're now back above this, watch this to see if that's going to act as a catapult up above these. You know, if we stay above this first presented fair value gap, it's going to try to attack some of this. First presented, it's right there. Okay, see how it's closing above that? It's got a refusal to want to go lower at the moment, even though that's a super clear, very close target. It just was reluctant to want to get down there. So now that we've traded to and through that first presented fair value gap so much at this point, we're going to have to pay close attention to this. Now we got a bullish breaker in here. So it makes sense if they did want to take this up to these equal highs up here. So let's see what a return into that would look like, right? So yeah, we're in a macro now, so 645, and now it's really opening up. See what the difference is before the macro, in the macro. It's very aggressive. Super obvious difference. I'm giving you no real ability to catch this tiger by the tail. It's just really ripping. So now we also have this, so that should act as inversion. Okay. So yeah, watch the return into that. If it shoots a wick into this, should be fairly sensitive, trying to get us up to these equal highs up here. See if we can't get that to take place. It's a pretty nice run right there. See the sensitivity? See if that can continue, you know, we should be able to finish this off up here. Now, if it runs all the way back down in the middle, I mean, it's kind of a testament to the conditions that we're trading in. It's going to be a bit chaotic. The follow through is going to be lacking. It's going to have somewhat of an issue. So yeah, let's see what it does. So yeah, we want sensitivity in this. We don't want to see it come all the way back down. That's high resistance. We don't want that. We're in the macro, so I'm assuming that we should be able to peak up above that. If they don't peak up there and they leave that available, again, I literally can't stand it when they leave equal highs. I want it to be tagged, because if it doesn't get tagged, any short is at risk of turning around to try to come up here real quick. But we do got the failure swing down here. We got this inversion. Yeah, fast Asia, fast pre-market open, fast London, many times can lead to price doing this, right? Going against it to start. Yeah, that's nasty. This is like seek and destroy type of vibe. Could say that if we get up above this, it's going to be very, very quick. We don't want to see that low get violated. See if we can't get a punch through that high, simply just above that high, and that's enough. And that's enough for me. That is enough for me. So yeah, now let's talk about it, okay? Okay, so we took that there. Take a short there. Okay, so this is going to be another one that I'm sure I should have fucking held it. So again, let me actually pull this up there for you. Is that it? Yeah, that's it. Okay. So this is my AMP live account. Right, I don't trade demo. I did that long enough. Okay, so looking at this, right? We talked about this short in here. Okay, talked about that to try to see if it could hold this level, and then see if it could go lower. Okay. That one I took a 29-point loss on, right? Again, in the midst of me saying, do not take a trade right at 6:30. Okay. This is the exact reason why, because it can chop around and you can get fucked up. Okay. And if you can't deal with it, right, it's going to mess you up. So that loss took place, right? It ran up. I still had conviction that it's going to go lower. Then we ended up getting this. So I put my stop 736. Okay. So entry was in there, was in profit. Honestly, could have just closed it to secure the 29-point loss because I was already 120 points. But I put it at, what is that? 736. So that was about 20 points secured, right? So a little bit of the loss was secure. So I took a short that lost and a win, a very small win that I was just trying to see that explosion through the low, simply targeting the regular trading hours gap. And that would have been it, right? But it came back, stopped me out. So I had one win and one loss to start the session right now. Okay. But then as price exploded higher, again, I told you guys, these highs up here, if the shorts fail, these highs are going to be targeted. And you see the intuition that I've mentioned all morning. Well, I don't like to short equal highs. I just can't stand it because of this type of stuff happens. And when I break that rule, it becomes a little more difficult. right? It fights me a little bit. But, right, I still had conviction. We didn't break this high yet. But once it broke this high, like I said, I figured that it's going to get up here. You take this high up here, low, high, to the failure swing. That's a type 2 dealing range. So when this displaces through that high, okay, we're going to target the buy side up there. So with that back end knowledge, right, with the 2 trades that were already taken, engaged, one was a win, one was a loss, right? The first one was a loss. Second one was a small win that did end up turning around. With that being the case, I'm afforded a 3rd trade. If I take 2 losses in a row, I'm done for the day. It'll never go over 3 trades. And it's very particular circumstances for the risk protocols I teach you when I'm allowed personally to be able to take that 3rd trade. If it's a win and a loss, right? And that win at least captured 50% of that loss, that initial loss. In this case, it did, right? So I'm afforded a 3rd trade. Okay, well, that 3rd trade was here because now we have this low, high, failure swing. This up candle becomes a mitigation block. Okay, what the hell just happened? Okay, so this up candle here becomes a mitigation block. Okay, so with that being the case, track that over real quick. 806, yeah. So that becomes a mitigation block. So once it went down into that, I took a trade right inside this retracement, that first candle, right? With this wick on this candle here. I took the trade right there because I wasn't sure if we were going to use this inversion as support, which again, did I not tell you to watch that as a turnaround, like a turnaround event, like a level that should hold price if we're going to try to target the highs up here, which once it took this high out, that's confirmed, especially because it was so clean, so easy to see. And so in that instance, price shot a wick into it. And what did I do? I took an execution there. And then price pulled down into this mitigation block. I took another entry there, right? Let me see. Right? So that wick right there and that low right there, right? Well, pretty much on this candle going up, right when it started turning around. So about 26, 826. Okay. So again, it went from one perspective. We laid out the contingency plan if it was to fail well in advance. I said if it does not go short, it's going to target the highs up here. And then that doesn't upset anything. It could run up here, tag this, and then go lower, which it very well could do. Look at this 8-hour chart. We still haven't even changed state of delivery on that 8-hour. It looks very convincing on this 1 minute. But on the 8-hour, it hasn't done really anything to change the narrative. So this can now turn from a market maker buy model, because that's what this turned into. This was the distribution area, right? Retracement, consolidation. Right? We had accumulation, smart money reversal. This is the distribution, right? It accumulated and sold off on the left side, creating that imbalance. That imbalance gets overtaken, turned to an inversion, and then it distributes to the buy side. Okay. But literally, these are the 2 things that I used to execute the trade: the low, high, failure swing, and then the fair value gap in here that got overtaken, coupled with them being violated to the upside or traded through up to the upside, then retracing while we have equal highs up here, right? And again, this is very, very interesting how often this is happening, by the way, with my indicator. I could basically call this a power 3 indicator as well. I should probably rename it, right? But we got accumulation for the AM session, manipulation down below, and then going into 7 a.m., we're going to start the distribution. But if this does turn around and we end up declining, targeting these relative equal lows, which could very well be the case. I'm not putting it past them. If we break this accumulation in here, say it gets down below that, you draw a box on that and it should return into it. If it's bearish, it's going to hold. And then this fair value gap here can be used as an inversion too, to go lower and then target that low. But again, I use this inversion fair value gap here, the equal highs as a target, given this failed once it broke this high, and then the break above this high, that's a low, high, failure swing, displacement to the upside, creating a mitigation block. And so when it traded into 1, I trusted that, right, with the wick in this candle. And then 2, coming down to the mitigation block. Look at the precision on that. And why is it trustworthy? Because the displacement happened, the shorts stopped for a minute, and we have those equal highs. Those equal highs do not upset the higher time frame narrative. So it's totally fine for them to go up there, and I could still be bearish overall for the narrative. But right now, bias is bullish, right? Simply until it got up into these highs. And now we're going to watch how price is going to behave in here. 41. So 114 points plus 20 points minus 29 points. So we're green for the day, for a 4th straight day, right? Live, which is not new, right? With a loss, being imperfect, right? Showing the mistakes that can take place, right? And the hardship that can be presented when you trade right at that 6:30 time window. Okay? On a live account, not a fake account, not a demo account, right? There's nothing wrong with demo. But I do this with real money, okay? I hear some people say, oh, you're not showing me all your payouts and your Lambo. Like, where's all? Okay. We call the market every day. You only need 2 brain cells to rub together. Okay. Rub it together. Watch the video. I don't overtrade and over leverage. I've been doing this for almost 7 years. Okay. I mean, it's not hard, right? I don't lead with that, because then I attract signal junkies and give me a trade. And I can't even describe how much I can't stand that. You know, because you're not learning, you're depending on me. And what if I was, what if something bad happened to me and you're depending on me giving you a signal? You're wasting your time here if that's what your objective is. And I understand, right? That's why I show what I just showed, but I'm on live every day. You can get a demo account and take the trades on the ideas that I talk about. And then that proves it to you, some people, they like to flaunt this and flaunt that. I don't flaunt. I'm not a braggadocious person. And quite frankly, I don't want that attention. Really, I don't. But at the same time, I know that there's students that need that to trust what it is that I'm doing. And that's why I show you guys, more so in my private group. But, here on YouTube, I'm still doing what I can to show you that as well, while keeping intact the integrity that I said I would have, right? By being solely focused on keeping students focused on how to trade, not how much money does this guy make. Let me just fantasize over his lifestyle, right? It's unnecessary. It doesn't help you. And there's many other people that suck ass but show thousands of dollars, but then also don't show their losses, right? That look good, but they can't call the market like we do. So you got to pick your side, right? Pick what you want out of a mentor. Do you want to be having a lot of smoke blown up your ass, or do you want to really learn how to trade? Do you want to actually be able to do the things on your own, or do you want to just live in someone else's reality by fantasizing over what they could show you? When they aren't showing you the downsides. I'm not perfect. I'll be the first one to say that. I'm not perfect. We are way above average though. And I don't have to show you a broker statement to show that. You just hop on the lives like you have all week. How many trades have we called that have worked out this week? Just this week, let alone the last 5 years, right? I mean, you can imagine, right? And I have private students in the chat right now. Come out and say that I'm lying to the public. That, when I say, we do this literally every day in my private group. There's always something profitable that we can identify. Tell me I'm lying. Tell everybody I'm lying. I encourage you to do that. You should do that. But I'm not, right? It's the facts. So nobody will come out and say that. You know, it's not only me either. Go check out my student Harley, right? I mean, he's breathtaking at this point, and he's not even, I don't even think he's 21 yet. And he's only worked with me for what, 2 years, 3 years, going on 3 years this year, I think. But he's walking on his own now. You know, he came to me with like what, 3 months experience or something like that. Jumped around from a bunch of different, you know, sources of information. But he says that, you know, most of the value came from here. You know, the good habits come from here. Actually proving that we can call the market lives here, right? And again, there's other good traders and whatnot. But again, I mean, you can't argue the undeniable. And today's yet another example of that. Even being imperfect, okay? I just shared a rule about my wins and losses. When I take a loss, you know, it is what it is. The next trade, if I take a loss, I'm completely done for the day. 2 losses in a row means something's wrong. I'm not seeing things correctly. I need to preserve capital, be in preserve capital mode. But when I take a loss, then a win, even if it's a break even that secured a little bit of the loss, I'm still afforded that third trade. If I take one win, I have the decision. Do I want to stop? If it hits my goals, you know, most of the time I stop. All I'm aiming for is, you know, $300 to $500 a day if I can get it. I'm not aiming for much. You know, I don't have to have a Lambo. I just don't want a job. And that's my freedom, right? That's my kind of freedom. Your freedom may be different. Your goals may be different. You may have to be a little more aggressive, right? If you want to get a Lambo next month, which, you know, it's not going to happen even if you want it, no matter how aggressive you get. But, you know, you got to define these things as well. It's very significant. But, you know, you don't have to do too much, okay? How hard does it seem, given what we talked about today, for us to determine bias, right? Determine what price is going to do, right? How long did it take? It didn't take that long. We had a rough idea at the beginning. That rough idea ended up getting turned around on, right? Had a couple of engagements. I could have just saved those engagements and not even had to recover anything, right? Or feel that I had to take a third trade. I could have just waited, like I was telling you guys to 650, okay? And stuck within those rules. But, you know, when you get experience, sometimes you bend the rules a little bit. Sometimes you pay the price. Sometimes it's a good thing. But, you know, it comes with the territory. But for a new student, if you just follow the rules, which is what I followed before I was able to feel like, okay, I could bend things a little bit, you would have been able to capture something like this. I painted it out. I talked about it. I said when it gets above this high, gets above this fair value gap, that should act as support, and then that should be the reason price runs up into these highs. I laid it out very clearly, right? And maybe you didn't trust it right away, right? Because there's just not enough experience yet. But I promise you, this stuff is very repetitive. We do the same stuff constantly. We have a very organized system. And these very particular things like this inversion, like this mitigation block, right? The stuff repeats, you know? And again, you're going to find what works for you. And you're going to stick to that. And because I'm so multifaceted as a mentor, I can help you thrive in that specific PD array that you want to focus on versus some other mentors that don't have a well-versed, like diverse pool of knowledge that they can pull from. So they have to force you into their mold, and that doesn't work. I can't tell you one model and then force you to do it. And most of the time it just doesn't work. The failure rate, it's just astronomical most of the time because some people can't see order blocks, or they see them, but they just don't like them. They don't trust them. They like the fair value gap. Maybe they don't like the fair value gap. They like the breaker. Maybe they don't like any of that, and they just like to trade the wicks, right? Maybe the mitigation block. Maybe they like that. Maybe they like the rejection block, and everything else doesn't matter to them in terms of execution. It really depends, you know? But whatever it is, because I'm multifaceted, I have 5 models I engage, 3 primary, 2 extra, just in case I can't find something in the others. and I have a vast understanding of most of the PD arrays. I don't know all of them. I don't use all of them. Okay. I'm familiar with all of them, but I don't necessarily go in looking for all of them on a daily basis. And again, that's a testament to the fact that you don't need every single idea that he teaches. But you want to expose yourself to most, because that one that you skip might be the one that eventually becomes your model, something that you resonate with, something that changes the whole perspective for you. Okay. And again, throughout that journey, right, along that walk that you guys all have to take, I'm here to just try to keep you on the rails. I'm here to show you what I do that works. I'm here to show you the dynamics internally in price, right? How it operates from what I've learned from ICT over, 7 years, and my own experiences, right? And then we find eventually what you resonate with. And then you grow from there. Whatever starts to work, whatever you see in price, you stick to it. And just remember, these are very important words. You don't need every single concept. You want to look through as much as you can so you know what's available. And if something sticks, you stick to it. Any model that you use needs to be practiced also for 6 months. No live trading at all. Just demo, right? Or just 3 months back testing, 3 months like actually engaging it in a demo. And then if you see good results, you make your own decision. Whenever you feel the time is. The time that's necessary is different for everyone when it comes to getting to where you're trying to go, getting to clarity, getting to confidence, But you should never think, okay, well, it took 6 months. The results are not, super, super good, but I need money, so I'm going to start trading live. If that's the thought process, it's never going to work. Okay. As boring as that may sound, right? As unappealing as that may sound, it's the facts. And I'm not here to sugarcoat. I'm here to give you the facts. I'm here to help you gain clarity so then you can do something spectacular with your life when it comes to trading and make this a real, reliable, trustworthy, repetitive, dependable type of income, which I can't guarantee, right? No one can, because it's up to you to apply the stuff that's taught. It's up to you to manage risk properly. It's up to you to step up and walk away, or step back and walk away when something's not going right, when you feel yourself spiraling out of control. It's up to you to do the back testing, right? It's up to you to practice and do the things that is required. And nobody knows how long it'll take for you to be successful. Nobody knows. God knows. But we're never going to know. None of us are going to know. And just because you learn something doesn't mean that right away it's something that'll work right away to make money. You see me doing this stuff every day. That does not in any way guarantee that you're going to be able to learn something in a week and then come out there and do exactly what I do every day, given the 7 years of experience, tens of thousands of dollars that I've lost and had to recuperate, loans that I put myself in, doubting myself. I can't transfer that stuff to you. But what I can do is transfer process. And then you do the practice, and the process plus practice over time gets you to clarity and then potentially profitability after that. But again, that's all up to you. I'm just a conduit. I'm here to help you. I'm here to help keep your mindset proper, give you resources and have conversations that train your mindset, how to think, how to read price technically, right? But that's the extent that a mentor can give you. And I can come out and do it live, which is something most people can't do. And most people don't offer it. They just sell you a course and tell you go about your way. I'm doing this on YouTube, right? And for those that are interested in what I do, who like it, there's an option to take the relationship to another level. So then I could work closer with you and help you iron out whatever problems you may have. And that's a lot of work. So there has to be a filter process. It's the way it is. Okay. But yeah, again, take these things into consideration that I've talked about. This is yet another day in a row that we've been able to call price. Like I said, if this gets down into this level here, I would like to see if we can't use this as inverted balanced price range. So the bullish order block turns to a bearish order block, and the market maker buy model then turns to a market maker sell model. I think that's what we're going to see. It's a downside movement. We have failure swing down here. I would be somewhat, I guess, surprised somewhat if they don't get us down to here. We took this out because think about it. They set liquidity down here, engineering liquidity. So liquidity is resting down there. We still have the gap on the regular trading hours not tapped. We just ran up, triggered in counterparty liquidity from overnight. So everybody that was short, everybody that was buying, they're now being dragged out of the market when it punches through the high up there. Okay. And now it's quickly dropping lower. This right here is the YouTube 2022 model short. Stop run, fair value gap, breakdown. We got a wick. Respect to the wick. That's another potential idea, right? If we were looking at this, okay. We did lay out this potential idea unfolding. Going higher, it may take that and then continue to go lower. Us getting down below this low here, I think would be a valid thought for this to go lower and then try to wipe this out. Okay, let me take this off. So yeah, this mitigation block, I mean, it was just so beautiful, wasn't it? It's amazing. If this fair value gap, actually, so yeah, this down here was the early sign that it was going to take off. Remember when I was talking about this, right? It went through it. I said, if it's going to go lower, it's going to respect that. It didn't. So it shot through it. And I said, okay, well, if this is not going to go short, this is going to be the level that starts to run higher. And then once it takes out this high, that confirms that this is going to be targeted. Okay, so inverted this, not inverted, but reclaimed the first presented fair value gap from that 6:30 time, that 6:30 open, the first fair value gap that formed. It traded to it, through it, and then through it again. And you see the closure right there. That's a beautiful idea there when it closes above that midpoint. One thing you want to consider this too, right? This fair value gap, this bearish fair value gap, when it sent this candle above that and closed outside of it right here, that is a change in state of delivery. That is a confirmation for the inversion. And then price came down, used a reclaim plus the inversion, and then shot up higher. Like I said, this should be vicious. This thing should viciously take this low out. Look at how easier this stuff looks in here. It looks a lot cleaner than it did pre-market open. Look at the difference, right? This is one perspective, right? Pre-market open. Let's go all the way back to 5 o'clock or 5:30. The bond market open. Okay. Bond market open. And then this is the 6:30 open, right? After the open price, that first 30 minutes. Okay. Going into that first macro, look at the difference. This in comparison to this. Which one would you think there's more opportunity in? You want to do this, by the way. You want to take the 5:30 to the 6:30 or 5:30 to 6:45 a.m. Pacific Standard Time. And then you want to map out from 6:45 say to like 7:30. Okay? Maybe even 8 o'clock. Like I said, this should hold. If it's going to go lower, that should hold. Market maker sell model. Looks like that's the case. So you'll do what you will with that information. But you want to go ahead and do this, right? Outline the beginning from 5:30 to 6:45, and then after that up to 7:30 or 8 o'clock. Okay, so from the macro and beyond versus before the macro, that 650 macro. Okay, and you want to get screenshots of this. Burn it into your head that pre-market open, that first 30 minutes is a whole lot less opportunity than it is in 7 a.m. right? Or from the macro 650 to 8 a.m. Okay, I've shown this with the indicator itself, right? The indicator that I have, it's outlined it beautifully. And every single time, oh, not every time, but most of the time when that first 30 minutes unfolds, I mean, it's just spectacular, right? It's so much better than it is to trade pre-market open or right at that 6:30 or just at the very, very start of the session. Everybody's doing that. Everybody's antsy. They want to get in. They want to do this. They want to do that. And it's just a shit show. Okay. So it doesn't have to be. You don't have to keep losing trades constantly and then seeing them work out. You know, you could put yourself in better position. So again, I literally talked about this and it just offered. You put your stop above there if you would have executed. It literally just offered another 74 points as we were talking about this on a move that I laid out well before it even manifested. How do we know this? Right? Like how? It's because we know what we're talking about every single day. Does that mean we win every day just because we're correct on where it goes every day? No. No, sometimes I make mistakes. Sometimes I'll execute early. But I can tell you that by midway through AM session, we eventually know what price is going to do, even if we start off not knowing. Or if we're wrong at the very beginning, right? Because the language price speaks is very clear once you understand the components. So let me see. I stocked that 15-minute CIBI and it closed within pre-market consolidation. I'm in shorts. Nice. Remember, all you're looking for is 20 to 30 points if you guys do choose to engage. This move relative to this, it did begin. We are at equilibrium from the low to the high. So again, the fact that the IPOs tomorrow is still a risk of this not taking off and kind of playing games with you. So just keep that risk in mind, right? It's very, very precise areas that have had to be targeted. Like this was pretty precise. This was an okay continuation. But again, they may want to leave levels available for tomorrow. So the risk is there. And if you're okay with the risk and you're able to get in at something that makes sense, then of course, you know, you're going to do what you will, right? Like this right here, price coming down into that. This right here offered that opportunity, broke through it, came back in. If I didn't take a trade earlier, that would have been the trade I took a trade on, or this one, right? Because that's the 2022 model. Why is this safe? Because this low to that high, breaking down below that low is a breaker. Okay. Not only is that a breaker, but it's also stop run, shift in market structure with aggressive price action. So it aggressively reprices lower through that low. That's an ICT shift in market structure from the 2022 model theory. Okay. Price comes back into that. That's 2022 model using the fair value gap. And then price takes off targeting this low or equilibrium, right? From that low to that high. Okay. So yeah, in this instance, I would not touch it, right? Again, 70 points, that would have been something that I took and got out of. This is a scalper's market right now. It's not huge swings. We've already kind of dealt with that, right? Like things that run like a dramatic amount for quite a long time. We're literally ahead of the quarterly rollover and we have the IPOs tomorrow. So it's a get in, get out type of day. Okay. We talked about the risk of these things being the case at the start of the session. So you shouldn't be in here trying to swing at anything and everything. Now that it's kind of rejected this level and it's gotten above that, we may see one more leg higher. So we're going to have to observe. Let me see. Close a call. Break even. Yeah. Hey, it is what it is, right? It is what it is, whether you took a loss, break even, or won today or yesterday, or, you know, at any other time. It's all just part of the game. It's just like going to fill up some gas, right? It's not really that important, right? You don't really get emotional when you're at the gas pump. I mean, maybe nowadays, living in California, damn near $7 a gallon. It's pretty pathetic, but we're not going to go into that. But your trading should be the same. You go get some gas and you don't really think nothing of it. You come in, take a trade, you journal the trade, and you really don't think nothing of it. You know, it's okay to be passionate. It's okay to love this stuff. It's okay to have goals. You should have goals, but you shouldn't be putting too much pressure on yourself that, you know, every engagement is a problem, right? You don't want to have that type of mindset. But again, so because this got above this candle's high here, you have to watch how this is going to respect this. If this creates an order block and respects the midpoint of that, and we break this fair value gap that was used to short, that'll be an inversion fair value gap the moment that a candle closes outside of that range. So if this displaces and we close above that, not a wick above it, a wick with a closure inside, that's not a confirmation that this is going to keep going. A body overtaking that closes outside of it, that's a further confirmation that we may see one more push up and a confirmation to this level being held to go higher. Okay. Now, if it runs up into here, closes inside of it, and then we break down aggressively, then again, we have a low here, low here, low here. You see that green line? There's S&T right there. So if we get this to close outside of this fair value gap, again, we may try a little bit more of the buy side up here. But for now, if you take this low to that high, we're kind of in the middle of the range. So it's very, very risky to take a trade right at the middle of the range. It's better to let it run a little bit deeper because, again, that turns into a market maker buy model. Or if you're trying to go short, wait for this to get back down below that low again, right? Or simply invert a fair value gap, right? Get this to send a body closure below this candle. And then once it returns into that, you can reliably look to target the downside again, right? But right in here, I wouldn't necessarily be thinking really much of anything. We're kind of in between this bearish order block, bearish breaker, and this stop run that has now retraced. We got order block there, fair value gap, previous accumulation. So if we move up in time frames a little bit, so we see on this time frame, on the 5 minute, we got a bearish order block. Okay. Bearish order block. We got the fair value gap. So price has not sent a closure outside of this 5 minutes. So, you know, there's still a chance for this to want to hold and go lower. If this was to get below this candle's low here, that would make my objective pretty solidly aimed at the midpoint right there. Because we're in the middle of this range from that low to that high, again, it's very risky. You could take a buy using this order block to try to go higher. You could take a short using this fair value gap to try to go lower. But because we're spending time in here, because of the IPO tomorrow, just the current positioning of the market and what's ahead of us in terms of the news, when you're at equilibrium, I wouldn't be aggressive. Okay, let it prove it to you. There's nothing wrong with missing this setup to take this setup. Right? Yeah, it's not the sexiest idea, but you're allowing more confirmation and you're entering on something logical that should be able to support price. We got a response from this stop run. Price is still having a hard time going up. Shifting below this low creates one change in state, a second change in state. Order flow is fully confirmed by the time it gets down into there. So when it returns into that, it's a lot safer, quote unquote, right? There's always risk in the market. But it's a little bit safer given what we're looking at here for price to come up into that. We also have the fair value gap here, coupled with this bearish order block, which is a double change in state after a stop run, to then reliably try to see if we could take out something logical like this, or just simply aim at the midpoint of the regular trading hours gap. Okay. So yeah, I've said a lot, right, in a short amount of time. But I hope that a lot of this stuff has stuck with you guys. Again, we're going to end the day on another positive note for the 4th straight day this week. You know, it hasn't been without losses, right? I took, you know, the first loss, which was in here. Okay, the one that I showed you earlier in here. But one loss. The rest of the ideas have been winners, right? Over what? Over 2,000 points offered from our analysis this week, let alone the whole year. We're probably up above 10,000 points already called this year. I think we're well above that. I mean, I've called some pretty nasty moves. You know, I haven't been a part of the whole entire moves, obviously, but getting our piece has been a piece of cake, honestly, all year. And we picked the low of the year this year again. And we picked the time in January when price was going to reverse off the yearly wick. And we looked at the quarterly fair value gap, right? We've done quarterly analysis, weekly, monthly, daily, candle by candle analysis, publicly, privately. So, I mean, the stuff just works, you know? Yeah, look at Maddie's in my private group. He said, we are way over that total for sure. Hey, that's saying something, bro. I probably got to go calculate. I could get that data, honestly, if I just go look at my journal. Oh, that's another thing. Those of you guys that are tier 1 that are part of my private group or looking to join the private group, you get our trading journal. If I didn't say this yesterday, I think I may have said this yesterday. But you get the WMG Trading Journal. One of my students, Harley, shout out him for that inspiration and kind of showing me HTML, building a template and whatnot. Again, I can't say enough good things about Harley. Go follow him also on YouTube, Harley Trades. Go look at what he's doing and what the possibilities are. It's amazing. And Harley, if you're watching, I'm proud of you, bro. I always tell you, but can't say it enough. But yeah, so you join the private group, you get a bunch of different things. These calls every single day. You get a free journal, trading journal that's a TradeZella competitor, right? If I continue to make it good, maybe even add AI to it and a couple other features. I mean, we could already start competing with TradeZella if I wanted to turn it into that, but it's just one of the perks. And then, of course, after 6 months, you get access to the indicator suite. That's another thing, right? And yeah, and by the time 6 months hits, you're going to look back and be like, dude, I'm like a totally different trader. Okay. So just for those that may not know, if you guys do join the private group, that's some of the perks. And again, you just get everything that you've seen me do this week, every single thing that I've done all year, the last 3 years publicly, every single day, and access. If you go the one-on-one route, you get access to scheduling, so then we can make a schedule and do a deeper game plan and whatnot. So again, for those that are interested, right, it's not for everybody. Okay, the private group, it's going to stay small too as a limit. But if that is something that you believe would benefit you, if you like what I do here, if you think my teaching style resonates with you, if you're a serious trader that's willing to make the sacrifices, willing to be coachable, willing to be just part of the family we have over there, you're more than welcome. And that option's always there. I know that not everyone's going to want to do that, which is why we have this YouTube channel. So, thank you guys for that, for supporting me on YouTube as well. I truly appreciate it. That's why I try to come out here each and every live call, each and every video, to give you stuff that you can apply, things that are applicable just right away, so then you can start making progress right away. So whether you're part of the private group or not, whether you're new with me or not, I value all of you and I appreciate your time. And I'm grateful that you guys are here to get the value. And I'm even more so appreciative of the fact that you guys are taking what I've been talking about, right? Using, the things that are beneficial, not using some of the stuff that's not so beneficial. And then you're seeing results with it. You're seeing progress. The results will come from you. They're not going to come from me. And you deserve all the credit when you do arrive at that point. I'm just trying to play a role in keeping you guys on the rails and sifting through the stuff that you don't need and letting your focus resonate with what truly matters so then you guys can progress. Because I know how incredible this industry is. I also know how disgusting this industry is. Okay, there's a lot of people that would want to take advantage of you. And being in a community like this, you're not going to, you're not going to be able to be victimized by anybody on social media ever again. Because, first of all, you're going to know what to do. And going from a call like this, a community like this, to someone else, you quickly start to identify whether the person knows what they're talking about or not. So that's another perk when it comes to being in a good community, a community that actually knows what's happening. Because your BS meter, your sense of BS when it comes to the traders that supposedly know what they're talking about, becomes extremely sharp. And it kind of helps that not most traders on the internet can do what we do. So yeah, lots of benefits. Just wanted to say some of that stuff. Again, I do appreciate you guys for the time you spend. Hopefully you guys feel like your time is well spent here. I try to make it worthwhile. It's probably not the most entertaining stream, but I can tell you that it's for those that do focus and apply what we talk about, it's definitely one of the more effective communities. And yeah, it's kind of just the facts. So yeah, hopefully y'all see it that way as well. Again, do you guys have any questions? I think given the nasty behavior in here, I'm completely turned off to what it's doing. It could look to go up, it could look to go down, but you see the intuition of me telling you guys we're at equilibrium. So, it's going to be best to just kind of pause and wait till it gets down somewhere. Don't be too antsy. We're hanging out at equilibrium. It's probably best to pull back a little bit. You see how that intuition kind of resonates with how prices turned out, right? Came down to it. Yeah, you can make an argument if you go to like the 15-second chart. Oh, there's a setup there. There's a setup there. Possibly a setup here, right? We got the market maker sell model targeting the low. What about the market maker buy model targeting the high? You could go in and make these charts tell you what you want it to tell you, but you don't want to have to fight the market, right? The engagement's at 630. It's fighting the market. It wouldn't go, right? It kind of just lagged out, right? And then all of a sudden the macro comes in and, oh, what do you know? Like magic, it opens up. Very easy target was the objective. Once it broke up, right? Took the buy in there, right there, right there. Like we talked about with the inversion, with that mitigation block. And now this should, if it's going to go lower, be a market maker sell model. This may be them holding price for a little while, just so they can accumulate inside this bearish breaker. Accumulation, accumulation, accumulation. If we get a breakdown through this trendline liquidity, that's going to be proven to have been the case. And then, we'll see what it wants to do in there. But yeah, this is all engineered liquidity. We're inside this daily bearish order block. So again, buys are very short-lived. It's much easier to take a short. The buys, you got to know what you're doing, right? This is counter trend. I did take the counter trend buy. I'm more resonating with trying to see if this can go short. So if this breaks down through this low, again, I really, really, really like these lows in here. And then this could just be the, let me remove that. This could be the accumulation, right? We got high created. Maybe they might be taking shorts there, adding more shorts, adding more shorts. And then closer to the macro, which is in 7 minutes, that may be the time when price looks to expand. That'll be a great example of how the macros play a role, right? The macro here started the move. And then if this holds it, and then we go into the macro again, and then it breaks down as a result of being in that macro, I think that's a good study, right? Every single day you should be looking at those things. Again, the macros, for those that may not know, the last 10 minutes and first 10 minutes of every hour. we use the last 15 minutes and first 15 minutes of every hour. So 6:45, 7:45, 8:45. I don't know. It's that 5 minute span kind of like has an early start to the macro. Sometimes I've noticed. ICT doesn't say that it starts at the 45 or ends at the 15 of every hour, right? He has a 10-minute window, right? 10-minute, last 10 minutes, and then first 10 minutes of every hour. I don't know. Just for me, it fits, right? The last 15 and first 15. It doesn't really affect anything. Most of the time, I'm able to catch the moves as they're setting up as well, versus catching something that's already running. But in the more sure time window, being like the 10 minutes, last 10 minutes, first 10 minutes, it's going to be up to you, right? Like maybe in your back testing, you'll see that the 10-minute variation is better than the 15-minute. It's just going to be solely up to the data that you collect. But for me, I use the last 15. And you guys could see that it works out, right? Look, 45 happened, and then immediately it takes off. This is inside the macro still. So whether you use the 15-minute, last 15 minutes, or first 15 minutes, or the last 10 minutes, first 10 minutes of every hour, you still get put in a very similar area. You just kind of identified a little bit earlier when it comes to using the last 15 minutes instead of the last 10 minutes of every hour. And again, in your back testing, right, you're going to decide whichever one. It doesn't matter which one you use. I just personally use what I use, right? And I'm here to share my opinion, right? So it's going to be up to you to decide. I would say study both. You should have dedicated study for time, right? Whenever you see a high or a low form in a day, you want to note that time, because the first and foremost thing you got to look for is time and price, right? Time, then price. Time being macros, kill zones, time of the month, time of the week, right? Like the day of the week, day of the month, which month we're in for the whole year. And price is PD arrays and liquidity and inefficiencies. Okay, it's simple as that. So you want to have the time aligned with trading into a PD array as it's looking to target liquidity. Okay, and when all of that stuff aligns, you get what you see here. Time being a macro inside the kill zone, right? The New York session. Inside the macro, liquidity got ran here. Price broke up. We got a PD array being the inversion and the mitigation block. And then we got that delivery into that. So execute, and then liquidity is in alignment with that as well. Time and price. That's how you use it, right? That's what he means. When you hear the words time and price, this is what he means. It's a system, right? It's not just any old random time. And it's not just any old random PD array. It's the times in which PD arrays align with those specific times on your way to a particular liquidity pool or target, which could be equal highs or even some other PD array. And you just develop the nuances all around those elements. And again, every single day, you see that on full display here, here on YouTube and in my private group. Right? So that's what your goal is as an ICT trader, is to get very, very lethal in terms of understanding time and price. And hopefully some of the things that I just described makes what that is a little bit more clear, and where you're going to be headed. And you can get into even more advanced things, right? Like, what about taking this regular trading hours gap, measuring up standard deviations, right? Aligning those standard deviations with a PD array at a particular time of the day, right? Things could get real advanced, okay? We're not going to get too deep into that, but this is a way that ICT projects highs and lows of the day, And then once you go into the lunch hour, say like what, 11:30 Eastern, that is like 8:30 Eastern, you could end up using something related to this projection to then pick the highs and lows. We'll talk about that at some point if you guys want. But again, you can keep the projections even more simplistic and just simply go off of the central bank dealers range projections, which is this stuff in here. See these little lines? They're there for a purpose, right? They're there to project price relative to a particular range. So then you can pick highs and lows of the day. Look at what this looks like in here. What does that look like to you? Accumulation, manipulation. We should see distribution looking to target this low, these lows, and this low, which again has a failure swing down there. So this little piece here has a fractal situation happening down there. Okay, and if we go from that high to that low, it's going to be a little bit too big from this perspective. So let's actually go from this high down to that low. Let's get our projection there. We got 4 to 4.5 standard deviations right below that. We got 2.5 standard deviation that aligns with the projection going down below the regular trading hours gap. So these are two areas in price that I would watch for today. Okay. Again, all of this is not telling us whatsoever that this wants to give this up. This looks like accumulation, manipulation above, and then distribution. So if we can get it to break down below this, it should be off to the races to try to attack this. But again, that whole overall delivery could be saved until tomorrow because we got the IPO. So that is a risk. So you got to keep that in mind. If you look at price and it just stays like this for hours, right? Then obviously they're going to wait for it. Another thing too, we got that first presented fair value gap down there we used earlier. Just because it got used once or twice or 3 times doesn't mean that if it trades through it again, it's not going to be utilized. We actually have a bearish breaker in here too. So if this run from here is going to be reliable to go short, we should see that get respected. You also see high, low, failure swing, breakdown, and then we got this down candle here. The lower 25% is a mitigation block. Okay. Can't wait to be part of the family. I appreciate you guys saying that. Yeah, we're excited to have you guys. Let me see. Did I miss any questions? Okay. So it doesn't look like you guys have any more questions. It is about to be 8 o'clock. We are inside the macro. I'll leave you guys with one more assumption. We'll see if this can just continue to hold and try to get down into this level. If this high gets taken out, right, we already have buy stops, buy stops, buy stops taken. That's called the 3 drives pattern reversal inside of this breaker. So that is a high probability reversal area. And now that we broke through this breaker in here, it should respect that. Again, we also have the mitigation block. So this is high resistance if it's going to trade up into it. So we don't want that. Where's the lowest point of resistance? It's going to be down here with the failure swings, unfinished business. So I would expect this to come down through there. If you can't find a setup in there, so you miss it or you don't trust it or whatever the case may be, when this breaks this first presented fair value gap, the way that we can continue to gauge whether this is going to keep going lower is going to be by how it respects that. And if it gets down below that, it should be very extremely sensitive, right? Especially since we're in a macro. If that happens in a macro, that could be the last potential idea, right? If we were trying to get involved with the short, assuming that we miss some of these up here. it is stuck. It is consolidated a little bit, so it is a risk. We're still at equilibrium. We're not breaking outside of it. So I think breaking outside of it, getting down into this would be the better choice, because just because there's a breaker in there doesn't mean that it has to go. We're at equilibrium, so we're in an underlying level that may cause consolidation. You see this green box in here, right? Those are significant. Why the hell is it so... Why is it so stretched out all the way over there? So we got the new week opening gap right there too. So it's really respected. So it's just another reason why this breaker should hold and push price lower. So hopefully all that stuff makes sense. You see this purple little box in there? That is a first presented fair value gap from the other day, recently. So it's another area in price that should be able to support this continuing going lower. And again, we got failure swing. We do got SMT in there, which is somewhat of a concern. S&P is SMT is with the Dow. See that failure swing in there on the Dow, or stop run on the Dow, failure swing on the S&P and the Nasdaq. Well, if you would have trusted what I just said right there, that's another 60-point move. So the one loss in there had multiple ideas to fix it. Okay. And if you didn't take any of the buys, you're still able to be offered a short. There was one there that we talked about, went 70 points. It's a get in, get out type of day. It's that type of week. It's CPI week. So that was enough, right? It's definitely the deciding factor on whether you can be profitable with it or not when it comes to this idea, because it didn't have a full extension, right? It came all the way back to the breaker, this high to that low. It basically came up to optimal trade entry. Going back to what Sean pointed out earlier, just that concept. This is how you can use it on that lower time frame, in line with all the other things that we've talked about. The targets, these different PD arrays. You can also use it from this high to that low. Optimal trade entry is up there. I'm not sure if it's going to want to get up there though, because this breaker, right, buy side to sell side, midpoint of that should act as a balanced price range. It should stay in that lower 25% if it's going to keep supporting that idea going lower, at least relative to this time frame. Okay, so equilibrium right there. So preferably this lower 25%, lower 50% should be respected. And we could see that that's unfolding here. So yeah, again, another idea was offered in there. Still hasn't hit that level, made more equal lows. So it's offering multiple ideas, multiple opportunities to be a part of that. Again, I'm not taking a trade right now. Already got what I came here for. And if you got what you came here for, practice discipline. You're going to need it. You're going to need it for your whole career. So you might as well get comfortable with it, right? So yeah, it's kind of lethargic, but I think we've talked about a lot today. I think we've had a very, very spectacular week this week here on YouTube. I think that this has set the stage for what the summer is going to do. It's going to be a lot of volatility this summer, which I'm excited for. Hopefully we could keep seeing very wide moves, because, all you got to do is catch a couple of those and you could just hold it for a while and you could do some real spectacular stuff with one contract. So yeah. So again, if you guys don't follow me on Instagram, definitely go do that at WMG Trading with no special characters. across all platforms. Um, excuse me. Don't forget to also like the video, subscribe to the channel if you guys haven't already. It's much appreciated. It helps me get in front of you guys that need this help. Students that truly want to learn, because that's the audience, right? We're here to cater to students that really want to learn, that don't want the whole Lambo lifestyle shoved down your throat, that just want a humble, calm, really to the point experience. How is this going to be able to become a asset to you, right? And that's what this community provides. So again, don't forget to like the video, subscribe to the channel, share with anybody you know. Shout out Jen. Shout out Jen for doing that. Oh yeah, and I hit 3K subscribers. Thank goodness. It's been too long. Been waiting to hit that milestone for a while. We should have way more, but I'm not doing backflips off of buildings and flipping tables and whatnot. So, buying Lambos, renting Lambos, just to sell an image. So it's okay to grow a little bit slower. But the quality, it's never going to change with what we teach here. It's just going to get better and better and better. Especially as I continue to amplify my skill set with AI, right, or understanding of AI. It's just going to get more and more value, as every mentor should, right? They should leverage AI to serve their students best, right? It's an amazing tool, and that's another thing you guys are going to be able to harness here. I talk about AI, I talk about long-term investing, talk about so much stuff, but yeah, there's so much more that we have to talk about. Thank you to those of you who have recently joined me, who just found me. I can tell you stumbled upon something that I wish I had when I first started. Would have saved me a lot of money, like pain, that's for sure. But yeah, the last call, just before we go, clearly worked out. How beautiful is that? Just casually calling like numerous 100-point plays every session. Nothing major, right? And we're gonna get our target. Okay, so great way to end the week on YouTube. So again, thank you for the love and support. Appreciate y'all for helping me get to 3K subscribers. Don't forget to like the video, subscribe to the channel, and if you have any questions, just let me know. I'll be happy to answer any of those questions. Just send them to me on... Oh, I saw something, by the way. There's direct messaging on YouTube now. Did you guys see that? Let me see if I could... How do I pull it up? I forgot how to do it. I got a notification about it. I'm like, what the hell is that? How does that work? Yeah, I don't know where it's located, but when I figure it out, we're gonna talk about it, because then we could just have conversations in the community chat as well, and I could talk to more of you who are on YouTube. Most people don't know that this is an update that happened, but YouTube's not making it very obvious. I mean, it should have like messages. Like, come on, YouTube. Yeah, I'll look into it a little bit more and tell you more about it. But yeah, hit me up if you guys need anything. Instagram, DMs. If you're on my Discord, just send me a DM, or just send questions in the free Discord. And you guys that are in the private group, you guys know the vibe. I'm always here, so just let me know. All right. So again, thank you guys for the love and support. I'll see you guys in my private group tomorrow, bright and early as always, and on Saturday as well. And then you guys here on YouTube, I will see you beautiful people bright and early on Sunday as always. And then it's back to the games that we were involved in, right? So, all right, with that being said, God bless you guys. Thanks again. And look at that. Beautiful, right? So I'll catch you all on the next one, okay? Have a good rest of your day, you guys. Beautiful, beautiful, beautiful.